Welcome, and thank you for joining me today to explore the fascinating world of currency trading. As you'll soon discover, this is a field that offers endless opportunities for those who are willing to learn and put in the effort. At its core, currency trading involves buying and selling different currencies with the goal of making a profit. This might sound simple enough, but as we'll see, there are many factors that can influence the value of a currency, from economic indicators to geopolitical events. In other words, currency trading is not just about numbers on a screen, it's about understanding the complex forces that shape our global economy. The Forex market, also known as the foreign exchange market, is a decentralized global marketplace where currencies are traded. It is the largest financial market in the world, with over $5 trillion traded daily. Unlike the stock market, the Forex market operates 24 hours a day, 5 days a week. Currency trading involves buying one currency and selling another simultaneously. The value of a currency is determined by its supply and demand in the market. When you buy a currency, you are essentially betting that its value will increase relative to another currency. If the value of the currency you bought increases, you can sell it for a profit. However, if the value decreases, you will incur a loss. Having a well-defined trading strategy is crucial to success in currency trading. Without a strategy, you are essentially gambling with your money, which can lead to significant losses. To develop a trading strategy, you should first determine your goals and risk tolerance. This will help you identify the types of trades that are best suited for your investment style. It's also important to stay up to date on market trends and news that could impact your trades. Another key component of a successful trading strategy is risk management. You should always have a plan for limiting your losses, such as setting stop-loss orders or using hedging techniques. Finally, it's important to be flexible and adaptable in your trading strategy. Markets are constantly changing, so you need to be able to adjust your strategy accordingly. This may involve changing your trading style or adjusting your risk management techniques. By developing a solid trading strategy and sticking to it, you can increase your chances of success in currency trading. One of the most important aspects of currency trading is managing risk. While there are potential rewards to be gained from trading currencies, there are also significant risks involved. As a result, it is crucial to have a solid understanding of risk management techniques in order to minimize potential losses. One such technique is setting stop-loss orders, which automatically close out a trade when a certain level of loss has been reached. Another technique is diversification, spreading investments across different currencies and markets to reduce the impact of any single loss. Additionally, traders should always be aware of market volatility and use caution when making trades during times of high uncertainty. When it comes to analyzing currency markets, there are two main techniques: technical analysis and fundamental analysis. Technical analysis involves studying past market data to identify patterns and trends that can be used to predict future price movements. This technique relies heavily on charts and graphs to visualize the data and make predictions based on historical patterns. On the other hand, fundamental analysis involves examining economic and financial data to determine the intrinsic value of a currency. This includes factors such as interest rates, GDP growth, inflation rates, and political stability. By analyzing these factors, traders can make informed decisions about which currencies to buy or sell. In conclusion, we have learned that currency trading is a complex and exciting field that requires knowledge, skill, and discipline. By understanding the Forex market, developing a trading strategy, managing risk, and analyzing currency markets, you can become a successful currency trader. However, mastering the art of currency trading is an ongoing process. It requires continuous learning, practice, and adaptation to changing market conditions. As you continue your journey as a currency trader, remember to stay disciplined, manage your emotions, and always strive for improvement. Thanks for watching. Like and subscribe, and we will catch you on the next one.